Sir, very happy morning to all. So we are doing workout batch for the DT. In that, my dear lovable students, we have done the slot number 1, that is residential status. This will surely come for 6 mark in exam. The second slot, that is slot number 2, clubbing, set off and carry forward. Third one, chapter 6A deductions. My dear lovable students, the total weightage of this is 10 mark in exam. In that you will be getting an exclusive question from set off and carry forward. And from clubbing chapter 6A, this will be either asking us MCQ or surely this is a prerequisite to solve computation of total income. Clubbing we have done, all the provisions we have done, we are pending with 4 or 5 questions that will be completing in the coming slots. Set off and carry forward, all the provisions over. We are doing the sums, balance will be completing. Today's slot, we are entering into a new chapter called as chapter 6A deductions. These are what chapter 6A deductions, my dear lovable students. 80C series, 80C series, 80C, 80CCC, 80CCD subsection 1, 80CCD subsection 1B, 80CCD subsection 2, 80CCE and 80CCH. These are 80C series. Tell me once again. 80C, 80CCC, 80CCD subsection 1, 80CCD subsection 1B, 80CCD subsection 2, 80CCE and 80CCH. We will talk about 80C series first. 80C is 80C series. In that 80C is prescribed investments. What is 80C? Prescribed investments. That means an individual or an HUF. My dear lovable students, most of the chapter 6A deductions are applicable to individual or HUF. If you are an individual or HUF and if you are investing your money in the prescribed investments, whether you are a resident or a non-resident, 80C, who can see? Either resident can see or non-resident can see. Both people can see this world. So this section is applicable to either resident or non-resident. Sir, what are the conditions to be satisfied? In order to claim deduction under 80C, assessee has made a deposit or an investment in any one or more of the listed item. That means government has given a list. If you are investing in those items, your money, you are entitled to claim deduction under what? 80C. During the previous year, it must be noted that for the purpose of deduction under this section, payment or deposit need not be out of income chargeable to tax. For example, if I am having agricultural income, we know that agriculture income is exempted under section 10 subsection 1. Even from an exempt income, if you are depositing in 80C prescribed investments, then also you are entitled to claim chapter 6A deduction. So there is no prerequisite that you should deposit out of the taxable income itself. Sir, what is the quantum of deduction? Under 80C alone, the amount so deposited, that means there are so many investments are there. So in those investments, or 1,50,000, whichever is lower. So the statutory limit under 80C is 1,50,000. Sir, if I deposit only 1 lakh, you are entitled to claim only 1 lakh. Sir, if I deposit only, sir, 1,20,000, I am entitled to claim only. But if I deposit 2 lakh, I am entitled to claim only. Sir, what is the definition of family? For example, if I am an individual, if I am an HUF, sir, what is the definition of family? In whose names and all I can deposit? If you are an individual, sir, 80C is equal to SSC. 80C, SSC. Self, spouse, children. SSC. So what is the shortcut? 80C, SSC. 80C, SSC. Whereas if you are an HUF, even you can make the investment in the name of members. Because for HUF and members are relatives. Are you all with me? Okay, sir. So 80C means prescribed investments. Where I have to invest, sir? Sir, the eligible deposits or prescribed investments. There are 2 categories are there. Category A and Category B. Category A is applicable to individual and HUF. Whereas Category B investments are applicable only to individual. That means if you are individual or HUF, you can invest in category A investment. So if you are individual, you can invest only in the category B investments. What are the category A investments, which are common investments, which can be invested both by individual and HUF? My dear lovable students, life insurance premium. Number one is what? Life insurance premium, that is a hero of ATC. Every question will be tested from life insurance premium. Then annuity plans. Annuity plan means, annuity means every year. Every year you can deposit some money in an account called as annuity plans. And PPF man, public provident funds. And ULIP, unit linked insurance plan. Look at man, these are the four main investment plans. Number one is the life insurance premium. Like that you can show number one, life insurance premium. Number two, annuity plan. Third one, three things, PPF. And fourth one, four things, ULIP, unit linked insurance plan. Sir, this is the hero, sir. Without this, you won't get a question paper called as life insurance premium. For example, you are an individual or you are an HUF. Only these two people will be having life. A company will not have life. Partnership firm will not have life. AOP, BOI will not have life. Other than individual, HUF will not have life. That's why this section is applicable to individual or HUF. Sir, you are taking a life insurance policy. Sir, your parents would have taken life insurance policy in your name. If you die from the insurance company, you'll be getting a lump sum amount for, since you are insuring your health, insuring your life. This is not health insurance, this is life insurance. So you have to check that, sir, when you have taken the life insurance policy. First of all, before that, you check that whether you are a normal person or whether you are an abnormal person. Abnormal person means a person who are suffering disability under 80U or 80DDB. 80U or 80. Sir, I am a normal person, sir. This is a cutoff date, sir. On or after 1/4/2012. That means 1/4/2012 is the cutoff date for life insurance premium. My dear lovable students, sir, life insurance, we are having only one life. We don't have two life, sir. 2012 is the cutoff date for the life insurance premium. What has happened, I will tell you. For example, what will practically happen is, sir, we will be taking life insurance premium with some assured of 1 crore, 2 crore, etc. Some assured in the sense means, if you die from the insurance company, you will be getting 1 crore or 2 crore. Even you can take 10 crore also. That depends upon your, sir, financial capacity. Based on that, the premium will change. Sir, every month or every year, they will ask you to pay 10,000 rupees premium, 12,000 rupees premium, 13,000 rupees premium, 15,000 rupees premium, like that. For example, my dear lovable students, if the, sir, policy sum assured is 1 crore or 2 crore, what earlier provisions was 20% of the actual sum assured. Till 20%, you can claim it as deduction under what? ATC. This is what the provision. But government came up and said that, why this much deduction we are supposed to give? We won't give this much deduction. We will give only 10% of the sum assured. That's what, on or after 1/4/2012, my dear lovable students, you are entitled to claim only 10%. That means after 2012, government restricted the deduction from 20% to 10%. This is what happened. So before 1/4/2012, 20% of the sum assured, whereas on or after 1/4/2012, 10% of the sum assured. Are you all really with me? My dear lovable students, sir, this is what the story exactly happened. I will tell you, man. Sir, the story plays like this. It is like before and what? After. Sir, what was before? Before what date? Before 1/4/2012. Before 1/4/2012, 20% deduction was there. Then, sir, on or after 1/4/2012, government came up and said that you are not entitled to claim 20% deduction. You are entitled to claim only 10% deduction. Sir, you tell me, will the people welcome this amendment or people will be sad about this amendment? Sad about this amendment. Every person who started criticizing the government, saying that earlier we used to get 20% deduction, but what this government is all about, they are reducing the deduction. That too, sir, this government is so cruel. This government is so cruel. Okay, sir, on or after 1/4/2012, the people, the assessees can be classified into two categories. Sir, normal person or abnormal person. Leave the normal person. From the normal person hands, if you are saying that you are entitled to claim deduction of only 10%, let it be okay. But for handicapped people, 80U and 80DDB suffering, even those people, sir, you are not able to give a deduction of 10%. Everyone started criticizing the government. If everyone started criticizing the government have to change the rate. They can't change the rate in between, my dear lovable students. Generally, they'll be using to change the rate in the next Finance Act. So next Finance Act came on 1/4/2013. Are you all really with me? That's what this change has happened. Look at here. Sir, on or before 1/4/2013, sir, on or after 1/4/2013, which is 15% of the actual sum assured. My dear lovable students, this is for abnormal person who are claiming disability under 80U or 80DDB. But before 1/4/2012, you have to check whether, sir, after this period for the disabled people, government made it 15%. But this gap, how much percent? 10%. But this gap, how much percent? That's what I have written here, my dear lovable students. On or after 1/4/2012 to 31/3/2013. What is this period? That amendment period. 12-13 financial year. It is how much percent? Before that, how much percent? 20%. This is what happened. Are you all really with me? This is what category A. There are 4 investments are there. Life insurance premium, annuity plan, PPF and ULIP. Coming to category B, category B can be further classified into 4 categories. Contribution to, that means you are an individual or HF, you are having lot of money, you are contributing some money to some place. Or subscription of, that means you are purchasing certain shares or debentures. You are depositing in money in some other places, and others means the miscellaneous part. Sir, contribution to deferred annuity plan. It's an insurance type of insurance plan. Deferred annuity plan means every year you are supposed to pay some money to the insurance company. After a certain point of time, they will give back that money. Then you are entitled to claim deduction under 80C. Deferred annuity plan of government. That means simple. Whether that deferred annuity plan has been conducted by the private insurance company or deferred annuity plan has been conducted by the central government. Sir, if you are contributing to any of this deferred annuity plan, then you are entitled to claim deduction under. Then statutory provident fund or recognized provident fund. If you are an employee, my dear lovable students, you will be contributing to statutory provident fund or recognized provident fund. Then you are entitled to claim deduction under notified deposit scheme of National Housing Board. Sir, National Housing Board, they are come up with a deposit scheme. If you are depositing money in National Housing Board, and you can withdraw that money after a certain point of time, or you can convert that deposited money into a house, because in India, everyone's dream is to have their own house. Are you all really with me? If an individual or HF is contributing to this, my dear lovable students, then you are entitled to claim deduction under approval of superannuation fund. We know that section 1013 superannuation fund. My dear lovable students, if you are contributing, how you are contributing to a statutory provident fund or recognized provident fund, the same way if you are contributing to a approved superannuation fund. And if you are withdrawing money, sir, 1013 it is fully exempted. Till the contribution to the approved superannuation fund, you are entitled to claim deduction under 80C. Subscription of, for example, notified deposit schemes. For example, you are putting deposit in a bank, notified deposit. Central government would have said that if you are having excess money, don't go and deposit normal FD. Please deposit in these schemes. Then you are entitled to get deduction under what? 80C. National savings certificate will be there. National, that means government will say that if you are interested to put savings, don't put in FD, you put in this particular account. We will be giving you a certificate called as National Savings Certificate. And units of UTI or what? Mutual fund. So there are certain selected mutual funds or UTI are there. If you are subscribing the units of UTI or mutual fund, you are entitled to claim deduction under notified subscription of Housing Finance Corporation or Housing Board. If you are subscribing, sir, to the Housing Finance Corporation or Housing Board, you are entitled to claim deduction under 80C. Equity share, debentures, units, etc. of the infrastructure undertaking. My dear lovable students, like infrastructure companies, DLF will be there. There are selected infrastructure company. If you are, sir, acquiring the equity shares, debentures or units of the infrastructure undertaking, you are entitled to claim deduction under 80C. Notified bonds of NABARD. Sir, if you are subscribing the bonds of NABARD, basically these all are equity shares or preference shares of some listed people. If you are interested to invest there, you are entitled to get deduction under. Sir, in a bank, if you are putting 5-year FD, which is called as tax saver FD, for 5 years, you are not supposed to break the FD. That 5 year, it will be a lock-in period, my dear lovable students. Then you are entitled to claim deduction under Senior Citizen Savings Scheme. This is not applicable to every person. If you are a senior citizen, if your age is 60 years or above, for you, special savings schemes will be there. If you are depositing that savings scheme, you are entitled to claim deduction under 5-year FD of post office. Instead of putting the FD in the bank, if you are coming and putting the FD in the post office, then also you are entitled to claim deduction under Notified pension scheme, my dear lovable students, after your retirement, if you want to get the pension, you can contribute that to the notified pension scheme. For that, you are entitled to claim deduction under ATC. Suganya Samriddhi scheme, for example, if you are having a girl child, sir, after her birth, from the age of 1 or 2 or 3 or 4 or 5, you can start saving in her name. Every year some contribution like 1,000 rupees, 10,000 rupees, 20,000 rupees, and at her age of marriage, 18, 20, 24, 25, whatever it may be, you can withdraw. That means individuals may have girl child. Sir, those who are having girl child can open Suganya Samriddhi scheme and they are entitled to claim deduction under ATC. Others, tuition fee. For example, you are studying what? CA. You are paying tuition fees to me. That amount of tuition fee, what you are paying, can be claimed as deduction under ATC. But for an individual, you can't claim that ATC. Your parents can claim, but maximum for 2 children only they can claim for full-time education in India. Are you studying in India? Yes, sir. Then your parents is entitled to claim whatever amount you have paid. For that, sir, tax deduction will be available under ATC. If your parents are filing their return of income, you can inform to them. And repayment of housing loan. My dear lovable students, when you take housing loan, you will be paying interest and you will be paying principal. For interest will be available under 24B under the head IFHP, and principal amount can be claimed as deduction under ATC. Are you all ready with me? These are the maximum things, man. Sir, ATC related things. We'll be doing ATC related question. These questions are there in my normal regular book, which I will be first completing for the quick overview. Then I will come to the workbook. Question number 1, illustration number 2. Compute the eligible deduction under ATC for assessment year 25-26 in respect of what insurance premium? Life insurance premium. From ATC, they will be specifically asked question relating to life insurance premium paid by Mr. Ganesh during 24-25. The details of which are given here under. If Mr. Ganesh has exercised the option of shifting out of the default tax regime under 115 BAC, sir, if an assessee is traveling through the default tax regime, he is not entitled to claim Chapter 6A deduction. Sir, if you want to claim Chapter 6A deduction, you have to travel through the optional tax regime. Sir, look at the date of issue of policy 30/3/2012. Is it before cutoff date, after cutoff date? Before cutoff date, because on or after 1/4/2012 is the cutoff date. Am I right? 1/5/2018 is after cutoff date. 1/6/2021 is after cutoff date. Sir, what is the definition of family? ATC is equal to, sir, yes, self is allowed, spouse is allowed, and handicapped son is allowed. But this guy is having disability under what? ATU. Are you all really with me? That means for him the cutoff date will be different. For self, sir, actual sum assured is 9 lakh. You tell me, since this is before, how much percent? 20%. 9 lakh into 20%. 1,80,000. Either 1,80,000 or real insurance what you have paid is 48,000. Whichever is lower. That means only 48,000 can be claimed as deduction. But for the spouse, my dear lovable students, the policy has been taken after normal spouse only, 10% is the rate of deduction. So 1,50,000 into 10% comes to 15,000. But they have really paid 20,000, whichever is lower. 15,000 or 20,000 comes to 15,000. Are you all really with me? Whereas this handicapped son, whether it is before or after, the percentage is 15%. 4 lakh into 15% comes to 60,000, but they have really paid 80,000, so only 60,000 will be allowed. Are you able to appreciate? 48,000 plus 15,000 plus 60,000 comes to 1,23,000, which is less than 1,50,000, because individually ATC should not exceed 1,50,000. Pakka? Sir, what would be your answer if Mr. Hari pays tax under the default tax regime under 115 BAC? If he is traveling through the default tax regime under 115 BAC, my dear lovable students, sir, ATC deduction cannot be allowed. If Mr. Hari pays tax under the default tax regime under 115 BAC, he is not eligible for deduction under ATC. Pakka? I'm coming to question number 3, man. Mr. Binu, aged how many years? 40 years. Has earned a lottery income of 1,30,000 gross during the previous year 24-25. Lottery income or casual income. What government is saying that without putting effort only you are earning the casual income, like winning from lottery, winning from crossword puzzle, winning from card game, winning from horse races or game, any other game of any sort. You tell me, my dear lovable students, in order to get lottery, in order to win the lottery, whether luck is required or the efforts are required. Just luck is required. So what government is saying that if you are having lottery income, that lottery income will be taxed at gross. Lottery income will be taxed at gross. In the sense means against lottery income, no chapter 6A deduction can be claimed. Against lottery income, no set off and carry forward can be claimed. Any deduction under the Income Tax Act will not be allowed against the what income? Casual income. So this 1,30,000 is not entitled for Chapter 6A deduction. He also has interest on FD of 35,000. This is a normal IFOS income. Against this IFOS income, you can claim Chapter 6A deduction. He invested an amount of 20,000 in PPF and 34,000 in 5-year term deposit. Both are eligible investments. He is entitled to claim deduction under ATC. So 20,000 plus 34,000 comes to 50. My dear lovable students, 54,000. But, sir, against this lottery income, they are not entitled to claim Chapter 6A deduction. Are you all really with me? That means, my dear lovable students, against the IFOS, they can claim. So, even though their eligible investments are up to 50,000, but they can claim only up to 35,000. What is the total income of Mr. Binu for assessment year 25-26 if he has exercised the option of shifting out of the default tax regime provided under 115 BAC subsection 1A? Sir, come on, man. Income from other sources. Interest on FD is how much? 35,000, which is normal IFIS income. Lottery income is 1,30,000, which is casual income. That means your total income under the head IFIS is 1,65,000 is the gross total income. Am I right? Since the gross total income include ineligible income for Chapter 6A, you are not entitled to claim Chapter 6A against this 1,30,000. Am I right? So you have deposited in PPF, you are entitled to claim deduction under ATC. You have invested in NSC, you are entitled to claim deduction under ATC. Even though your eligible investment are 54,000 against this 1,30,000, you can't claim Chapter 6A deduction. Maximum deduction available is only. Then your total income will be 1,30,000, which will be exactly your lottery income, which is the casual income. Are you all really with me? So, though the value of eligible investment is 54,000, deduction under Chapter 6A cannot exceed the gross total income, excluding long-term capital gain under 112. Sir, because that long-term capital gain is going to be taxed at special rate. 112A, long-term capital gain is going to be taxed at special rate. Short-term capital gain covered under 111A, because short-term capital gain is going to be taxed under special rate. Winning from lottery, which is casual income, which are going to be taxed at special rate. Any income which are going to be taxed at special rate, against that income, Chapter 6A deduction will not be allowed. Therefore, the maximum permissible deduction under ATC will only be 35,000. Are you all really with me? Sir, I'm moving into the next one, man. An individual assessee resident in India, sir, ATC is applicable to resident and non-resident, has made the following deposit or payment during the previous year 24-25. Contribution to PPF 1,50,000. This can be claimed as deduction under insurance premium paid on the life of spouse. Yes, spouse is an eligible assessee because, sir, ATC is equal to policy taken on 1/4/2018. 1/4/2018 means after is equal to how much percent? Assured value is equal to 2,20,000. So 2,20,000 into 10% comes to 22,000. But they have paid really 25,000. It should be restricted to. But my dear lovable students, you can't claim 1,50,000 and 22,000 under ATC because individually under ATC, the maximum deduction allowed will only be. What is a deduction allowable under ATC for assessment year 25-26 if you have exercised the option of shifting out of the default tax regime provided under 115 BAC subsection 1A? Sir, deposited in PPF, you are entitled to claim deduction under insurance premium paid on the life of the spouse. Maximum how much percent? 10% of the sum assured, which comes to 2,20,000 as the policy is taken on or after 31/3/2012 because the cutoff date is 31/3/2012. Am I right? So it will be restricted to 22,000. So total 1,72,000, but that will be restricted to 1,50,000. That's what the total deduction restricted. Are you all really with me? So my dear lovable students, what ATC is saying that, sir, prescribed investments, if you are ready to invest in the prescribed place which has been notified by the government of India, you are entitled to claim deduction under 80. Come on, man, 80CCC. We are having two things, man, 80CCC and 80CCD. Sir, both are notified pension schemes. Both are notified pension schemes. For example, very simple, man. Now, sir, I'm working, I'm earning, I'm getting salary. Like that, so many people will be there. At their prime time, they will be getting income. My dear lovable students, sir, but after 60 years, 50 years, every time, every day, I can't come and take class at morning 7:30. I will be not having business income. I will not have salary income. I will not have other sources. So, even after my retirement, I want income. So what generally assessees will do, they will be depositing their some part of their money in the annuity plans. In the sense means pension plans. After their retirement, they have to get monthly some amount called as what account, man? Pension account. Sir, we are having two types of pension accounts are there. One is 80CCC and 80CCD. What 80CCC is talking about is, for example, HDFC Bank is there. If you are depositing in the pension fund, which is controlled by HDFC Bank or ICICI Bank or any private people who are approved under the IRDA, Insurance Regulatory Development Authority of India, that is entitled to claim deduction under 80CCC. But the same fund, same bucket is holded by the central government also. That means if you are a central government employee, sir, central government is paying salary to their own employees, right, sir? If 1 lakh rupees, the government is paying salary to the central government employee. For example, railway, lot of employees are there. They won't give 1 lakh rupees. They will be deducting 10,000 rupees and they will deposit this 10,000 rupees in a pension fund account called as 80CCD. Are you all really with me? So there are two accounts are there, man. 80CCC and 80CCD. Technically, both are pension fund account only. Only difference between 80CCC and 80CCD are 80CCC is holded by the private people and 80CCD are holded by the, sir, amount paid in annuity plan of LIC. LIC means what? Life Insurance Corporation or any other insurance company under 1023 AAB. That means you are paying some amount to the LIC or any other insurance company. Who can claim deduction? Only individuals can claim deduction, irrespective of the residential status or what? Citizenship. My dear lovable students, only individuals can claim deduction. What is the quantum of deduction? Either the amount paid or deposited or statutory limit of 1,50,000, whichever is lower. That means under 80C individually you can claim 1,50,000. 80CCC again individually you can claim 1,50,000. Sir, pension or surrender of annuity plan. Sir, any sum so received shall be deemed to be the income of assessee or nominee and shall be taxable in the previous year of receipt. That means after once you retire, you will be start getting some income. Sir, at the time of contribution, you can claim deduction under 80CCC. At the time of getting pension, it will be taxable under the head salaries. Are you all with me? That means it is not tax exempted. It is not tax. If you want tax exemption, you have to contribute to the statutory provident fund or public provident fund or recognized provident fund or approved superannuation fund. These are not provident fund. These are pension schemes. That means you are contributing to pension schemes. So every year from your salary, are you contributing? Then you can claim chapter 6A deduction. But after your retirement, you will be start getting pension. At that time, that will be taxable. So deduction under 80CC is available to an individual, excising the option of shifting out of the default tax regime. And this is not available under the default tax regime. That means it will be available only to the optional tax regime. This is what 80CCC. That means if the pension bucket has been holded by other than central government, then 80CCC will be applicable. Sir, notified pension scheme of what government? Central government. My dear lovable students, sir, that bucket has been holded by the central government. Generally, sir, mainly central government started that for the central government employees. What central government is thinking that even we are an employer, we are paying crores and millions and trillions of salary 1 year. Am I right, sir? My dear lovable students, why we have to deduct some percentage for the purpose of pension and deposit in a private company? We ourselves can hold that money because we need fund for putting road, we need fund for repaying our debt. Even we have borrowed a lot of money from outside India, so we are liable to pay interest. So we need finance. So instead of going and again taking loan, we will be internally sourcing the fund from our own employees. Are you understanding? For that purpose, only 80CCD they bring. Sir, 80CCD, who will contribute? Either salaried employees will be contributing. Salaried employees in the sense means, if you are getting salary, sir, you can contribute to 80CCD. Sir, two people will contribute, my dear lovable students. Employee will contribute and same way, employer will also contribute. To the notified pension scheme under section 80CCD, employee will contribute and equally employer will also contribute. Are you already with me? Sir, how much employee is contributing? Actual contribution or 10% of salary, whichever is lower. If you are an employee, you can contribute maximum up to how much percent of salary? 10% of salary. Because if you are getting 100 rupees salary, if you are contributing more than 10 rupees, then how you will live in this world? Sir, you save only maximum how much percent? 10%. That's it. Sir, I am contributing 12%. Maximum deduction will only be 10%. Sir, I am contributing 8%. 8%. You can claim it as a deduction. That means actual contribution or 10% of salary, whichever is. It is a responsibility of the employer to take care of the employee. That means if you are my employee, you are spending your life for me, with me, for my company. You are providing services to me. That means if I am giving 100 rupees salary, my dear lovable students, what the act is saying that I have to give extra 10 rupees to you, but that 10 rupees should not be given to you as cash because you will spend. Are you all really with me? So what I have to do is I have to take 10 rupees from my pocket and I have to deposit in your name, in your account. That means after your retirement, you will be contributing already 10 rupees. Right, sir? Yes, sir. And even I will also contribute 10 rupees for you. That means after your 60 years of age, if society, if someone is coming and asking that where you have worked, you are saying that you have worked in ANM group and you are having pension. There is no need to go and beg to any people. So in society wise also, my company will be having more value because to get the job in ANM group, sir, we should be much qualified. They are so much good people because they will be also contributing to the notified pension scheme under section 80 CCD. So what they are saying is even an employer will also contribute on behalf of the employee. That is covered under 80 CCD. So for that purpose, the employer should be classified into two categories: central government employees and other than central government employees. That employer may be a central government or other than central government. My dear lovable students, sir, central government employee, that means our finance minister, central government is saying that we are having more love and affection towards our employees than any other person. So the actual contribution or how much percent of salary? 14% of salary, whichever is lower. Whichever is lower. Are you all really with me? How much percent? 14%. That means even employee will contribute only 10%, but government will contribute 14%. So total 24% will be deposited every year in the notified pension scheme under section 80 CCD. Whereas if you are other than what government employer? Central government employer. I am a normal employer. Hello, sir. Then you have to check that whether the employee is going through the default tax regime or what. If he is going through the default tax regime, an employer can contribute up to how much percent of salary? 14% of salary, because government want to travel through the default tax regime. Whereas if you are traveling through the optional tax regime, it should be, sir, actual contribution or 10% of salary, whichever is lower. Are you all really with me? Sir, I am ANM. My name is Anish Noor Mohammed. I don't have an employer because I am doing business or profession. My income will be taxable under PGBP. Am I right? Sir, if I am contributing 10%, sir, I don't have any other hand. I am an orphan. I don't have any other person. I don't have employer. Are you understanding? So if even I also want to contribute to the notified pension scheme and I am not interested with the Axis Bank, HDFC Bank or 80CCC deposit schemes, LIC, I want to contribute under 80CCD. That means if I have another hand, I would have put 10% and another hand would have put 10%. Sir, 10 plus 10, that's how this 20%. Other than salaried individual, 80 CCD subsection 1, actual contribution or 20% of the gross total income. It's not 20% of salary because I won't have salary at all. Are you all really with me? Because I'm not a salaried person. I am a other than salaried person. Whichever is lower. Whichever is lower. Are you all really with me? This is the limit for 80 CCD. So my dear lovable students, what we have understood, sir, you may be a salaried individual or other than salaried individual. I am other than salaried individual, right? If you are salaried individual, you can contribute and even employer can also contribute. You can contribute maximum 10% of your salary. Your employer can contribute, depends upon who are your employer, whether they are a central government or other than central government. If they are central government, actual contribution or 14% of salary, whichever is lower. Other than central government, my dear lovable students, it depends upon whether the employee is traveling through the default tax regime or optional tax regime. If it is default tax regime, 14% of salary, optional tax regime, 10% of salary. Are you all really with me? Other than salaried individual, then actual contribution or 20% of gross total income, whichever is lower. Whichever is. Sir, here they are having some more limit. So we understood that 80 CCD subsection 1. Sir, 80 CCD subsection 1 is whose contribution? Employee's contribution. Always how much percent? 10%. Right. Who can claim deduction under this section? Employee can claim deduction under this section. Are you all really with me? So the section is 80 CCD subsection 1. It is employee's contribution. Maximum limit is how much percent? 10%. And sir, who can claim deduction? Employee can claim deduction. Whereas 80 CCD subsection 2 is whose contribution? Employer's contribution. That is employer's contribution. That employer may be central government. Then they can contribute 14%. That employer may be other than central government. Then they have to check whether the employee is traveling through the default tax regime or optional tax regime. Default tax regime 14%. Optional tax regime 10%. Are you all really with me? My dear lovable students, and all the deduction can be claimed by whom? What? Employee only. There is no deduction for employer at all. His deduction we have talked in PGBP chapter under section 36. 36 subsection 1 clause 4, 36 subsection 1 clause 4a, 36 subsection 1 clause 5, 36 subsection 1 clause 5a. These are the 4 deduction which is available to the employer. Chapter 6a deduction chapter is not from the angle of the employer. It is from the angle of the employee. Can I proceed? Look at here, man. 80 CCD subsection 1b. Sir, this is Anyayam, sir. Employee can contribute only 10%, whereas employer can contribute up to 14%. That means I am an employee, I am now single, or I got divorced, I don't have that much money, but I'm earning more. Whatever may be the reason, I don't want to deposit how much percent? 10%. I want to deposit more than 10%. Government strictly said that, my dear lovable students, under 80 CCD subsection 1, an employee can contribute only maximum 10%. He can't contribute more than that. Sir, but if you are contributing more than 10% up to an amount of 50,000, whose contribution? Employee's contribution. He can claim it as deduction under 80 CCD subsection 1b. So assessee contributing to notified pension scheme, additional deduction outside the limit of 80 CCE. Sir, amount paid or deposited or the statute limit of 50,000. Sir, whichever is lower, whichever is no deduction of amount for which deduction is claimed under 80 CCD subsection 1. That means up to 10% of the salary you'll be claiming deduction under 80 CCD subsection 1. Over and above 10% of the salary, up to 50,000 rupees, you'll be claiming under 80 CCD subsection 1b. Accepting. That means, sir, 80C, what is 80C? Prescribed investments. What is 80 CCC? Notified pension scheme. What is 80 CCD subsection 1? Employees' contribution to the notified pension scheme. Am I right? Sir, under 80C you can claim 1,50,000. Under 80 CCC you can claim 1,50,000. Under 80 CCD subsection 1, sir, you can claim, sir, 10% of the salary or maximum it will be restricted to 1,50,000. Sir, all the 3 sections will be put together. You can claim only 1,50,000. Are you all really with me? Individually under 80C you can claim 1,50,000. Individually under 80 CCC 1,50,000. That 80 CCD subsection 1 is, sir, 10% of salary. That amount should not exceed 1,50,000. Put together 80C plus 80 CCC plus 80 CCD subsection 1 will be restricted by a section called as 80 CCE. Maximum you can claim is what? 1,50,000. Are you all really with me? 1 lakh. Now I'm moving into the questions relating to 80 CCD, and this is a beautiful and a fantastic and an interesting and an important question. The basic salary of Mr. Arjun is 1 lakh rupees per month. That means he's getting, sir, per month how much rupees salary? So 1 lakh into 12 means 12 lakh rupees is the salary he's getting. Am I right? He's entitled to DA, which is 40% of the what salary? Basic salary. That means he's getting DA. So add DA, which is, sir, 12 lakh into how much percent? 40%. Sir, 50% of the DA form part for the what benefit? Retirement benefits. That means employer is not giving the entire DA now itself. Some DA is saving and some DA he can withdraw only at the time of retirement. Are you all really with me? So into 50%, because an employee can contribute up to how much percent of salary? 10% of salary. There should be some definition for salary, right? Salary means basic salary plus DA if provided in terms of employment. That's it. Salary means basic salary plus DA if provided in terms of employment. That means 12 lakhs into 40% into 50% comes to 2,40,000. That means 12 lakhs plus 2,40,000 comes to 14,40,000 is the salary for the purpose of contribution to notified pension scheme under section 80 CCD. Am I right? Both Mr. Arjun and his employer contribute how much percent of basic salary to the pension scheme referred under section 80 CCD. So the contribution, you tell me who and all contributed. Both employee contributed and employer contributed. Are you all with me? Employee's contribution is 15% of basic salary. And he also contributed 15% of, they are not supposed to contribute basic salary. They are supposed to contribute on the salary. So they are supposed to contribute 10% of salary. But they really contributed 15% of the, so 15% of 12 lakhs comes to 1,80,000. Are you all ready with me? But they should have calculated 10% of 14,40,000 comes to. So in place of 1,44,000, employee has contributed 1,80,000. So extra contribution by the employee is this 36,000 can be claimed as deduction under 80 CC. This is 80 CCD subsection 1. And this can be claimed as deduction under 80 CC 1B. What 1B? 80 CC D 1B. Because over and above how much percent? 10% of the salary up to how much rupees? 50,000 can be claimed as deduction under 80 CCD subsection 1B. That's what our discussion is all about. Am I right? Whereas with regard to the employer's contribution, you have to check that central government employer or other than central government employer. This employer is not central government employer. Are you all really with me? The employer may be no. Other than central government employer, examine the tax treatment in respect of such contribution in the hands of Mr. Arjun. If he has exercised the option of shifting out of the default tax regime. Are you all really with me? Sir, that means if he is going to travel through the, so default tax regime, no. He is going to travel through the optional tax regime. Then even employer can also contribute 10%. Not how much percent? 14%. But if the employee is traveling through the, he can travel, sorry, he can contribute up to 14%. This is an amendment that 14%. I will tell you the logic of this 14 and 10. Government want the employees to travel through the default tax regime and the government want to claim less deduction by the employee. Are you all really with me? Because this is a new route. Hello, sir. Government want everyone to travel through the new route. That's why government is saying that if you are traveling through the new route, default tax regime, you will be having higher deduction of how much percent? 14%. But if you are traveling through the optional tax regime, you will not get 14%. You will get only. What would be your answer if Mr. Arjun pays the tax under the default tax regime? Because ulta, it will change. Sir, tax treatment in the hands of Mr. Arjun in respect of employers and own contribution to pension scheme referred in 80, where Mr. Arjun has exercised the option of shifting out of the default tax regime provided under 115 BAC subsection 1A, where Mr. Arjun pays tax under the normal provisions of the Act. First one, employer's contribution, we will talk. My dear lovable students, sir, if you are Arjun, your employer is contributing for you. That means, sir, you are getting some amount as salary in hand and you are getting some amount not in hand but in your account. That is a perquisite. Am I right? Employer's contribution to such pension scheme would be treated as salary since it is specifically included in the definition of the under 17 subsection 1 clause 8. Section 17 is the perquisite. Am I right? Therefore, 1,80,000 being 15% of the what salary? Basic salary of 12 lakh will be included in the Mr. Arjun salary. That means, sir, you will be calculating the salary income under the income from salary. Am I right? Sir, we are going to calculate the salary income of Mr. Arjun. What and all you will be including? Basic salary will be including some amount. I don't want the amount. Add DA, dearness allowance will be including. Am I right? Add commission. Sometimes he may be getting commission. Add bonus. These all are elements of salary. Are you all really with me? If you add like this, you will be getting what salary? From that gross salary only will be claiming deduction under 16 subsection 1A, 16 2, 16 3. Am I right? Based upon the route, whatever he is traveling through, either 50,000 rupees or 75,000 rupees as the 3 deduction we are having based upon the route he is traveling, he will be getting 3 deduction. But now, my dear lovable students, employer has contributed to the notified pension scheme. Correct? First of all, it's a benefit to the employee. So when you are calculating the what salary? Gross salary. Add whose contribution to the notified pension scheme under section 80 CCD. Like this, you have to include in the gross salary. Then only gross salary will be more. Then you have to claim, sir, if you reduce the deduction under that salary, you will be getting taxable salary. Am I right? From the taxable salary only, chapter 6A deduction you should claim. In that chapter 6A deduction, you will be having 80 CCD subsection 1. This is whose contribution? This he would have contributed from the what salary? Basic salary. So from this amount only this figure would have gone. Sir, less 80 CCD subsection 1B. Sir, we asked him to contribute only 10%, but he is contributing more than 10%. So up to 50,000 rupees, you can claim deduction under 80 CCD subsection 1B. Am I right? And 80 CCD subsection 2 is whose contribution? That means if you include here only, your gross salary will be higher. And if you claim it as chapter 6A deduction, then no effect will be there for the income. Otherwise, if you don't include here, you will be claiming a chapter 6A deduction which has not included in the gross total income. Are you understanding the logic? That's why Act is saying that employer's contribution to such pension scheme would be first treated as salary. In the sense means it should be included in the gross salary as per quoted, since it is specifically included in the definition of salary under 17 subsection 1 clause 8. Are you all really with me? Therefore, 1,80,000 being 15% of the base salary, 12 lakh will be included in Mr. Arjun's salary. Yeah, that we have to first include. Have you all understood the practical application? Now, employee's contribution. Sir, from where the employee would have contributed from his basic salary? Are you really with me, sir? Sir, Mr. Arjun's contribution to pension scheme is allowable as deduction under 80 CCD subsection 1. However, the deduction is restricted to 10% of salary. Salary for this purpose means basic salary plus DA provided in terms of. So I am calculating the salary for that purpose. We already calculated 12 lakh plus 2 lakh 40. We got 14 lakh 40,000. Am I right? Of this 14 lakh 40,000, my dear lovable students, an employee can contribute maximum 10% of salary, which comes to 1 lakh 44,000. But he has really contributed 1 lakh 80,000. How much extra contributed? 36,000 has been extra contributed. This can be claimed as deduction under 80 CCD subsection 1B. Are you all really with me? Nothing, man. Sir, simple. Up to how much percent of salary? 10% of salary. Can we claim it as deduction under 80 CCD subsection 1? If you are having anything over and above 10% of salary, that balance can be claimed as deduction under 80 CCD subsection 1B. B stands for balance. Are you all really with me? But that balance cannot exceed 50,000 rupees. That's what the statute limit is all about. Right. Now, 1,44,000 is allowable as deduction under 80 CCD subsection 1 because totally 1,80,000 has been contributed by employee. Am I right? Out of that, 1,44,000 can be claimed as deduction under 80 CCD subsection 1. This would be taken into consideration to the subject to the overall limit of 1,50,000 under 80 CCE because we are having a mathematical formula. Under section what? 80C. What is 80C? Prescribed investments. What is 80 CCC? Notified pension scheme. 80 CCD subsection 1. What is 80 CCD subsection 1? Employee's contribution to the notified pension scheme. Sir, these three sections should be limited. Should be what? Limited. That's why 80 CCE, it will end here. Are you all really with me? It's an ending section which is saying that put together the total of all the three should not exceed 1,50,000. Are you all really with me? And under 80 CCD subsection 1B, 36,000 allowable as deduction under 1B is outside the overall limit of 1,50,000 under 80 CCE. That means that 50,000 will not be counted for 1,50,000 rupees. Understanding? That means you are entitled to claim, my dear lovable students, you are entitled to claim that 50,000 rupees over and above the overall limit of 1,50,000. Sir, there is a doubt. Sir, so up to how much percent of salary? 10% of salary. You are supposed to claim under 80 CCD subsection 1. Whose contribution? Employee's contribution. Over and above 10% of salary. Up to how much? 50,000 can be claimed as deduction under 80 CCD subsection 1B. And this 80 CCD subsection 1 will be covered under 80 CCE And this 50,000 will not be covered under 80CCE. Am I right? My dear lovable students, let me ask you a question. Sir, is there any rule that first I have to claim 80CCD subsection 1 and then only I have to claim 80CCD subsection 1B? No. Alternatively, 50,000 can be claimed as deduction under 80CCD subsection 1B. First, you can claim 80CCD subsection and claim under 80CCD 1, very least. If an assessee who are having already 80C deduction, 80CCC deduction, if you utilize the entire 80CCD subsection 1 bucket to the extent of 1,50,000, for him it will be a great loss. Are you all really with me? Because maximum you can claim only 1,50,000. Sir, an assessee does not have 80C, 80CCC, then no problem, my dear lovable students. Then you can claim 80CCD subsection 1 to the extent of 1,50,000 rupees. But if an assessee in question is having already 80C and 80CCC, try to claim lower in 80CCD subsection 1. That means first fill the 80CCD subsection 1B to the extent of, in the sense means in the same question, total 1,80,000 is there. Out of 1,80,000, 50K you claimed in 80CCD subsection 1B. Sir, 50 minus 80, 1,30,000. What is the 10% of salary? 1,44,000. That means up to 1,44,000 I can claim under 80CCD 1. But I'm claiming only how much? 1,30,000. But still there is a gap of 14,000. That I can utilize for 80C. Hello, sir. Sorry, 20,000 gap is that because total is 1,50,000. Am I right? This 20,000 I can utilize for 80C or 80CCC because 80C plus 80CCC plus 80CCD subsection 1 is equal to 80CCE is equal to 1,50,000. Are you really with me? If you park 1,44,000 under 80CCD subsection 1, under 80C and 80CCC, you can maximum claim only 6,000 rupees. Are you really with me? Because as per 80CCE, it should not exceed 1,50,000. I hope that things are very clear. So the balance 1,30,000, which is nothing but 1,80,000 rupees is the total contribution made by the employee. Out of that, 50,000 can be claimed as deduction under 80CCD subsection 1B. Can be claimed as deduction under 80CCD subsection 1. Right? That's it. Story of employee's contribution comes to an. Coming to the employer's contribution, man. Sir, employer contribution to pension scheme would be allowable as deduction under 80CCD subsection 2, subject to a maximum of how much percent of salary? Because Mr. Arjun is not traveling through the default tax regime. He is going to travel through the, then the benefit will not be available. Employer can contribute only maximum 10% of the salary and employer is not a central government. Employer is other than central government. Able to apply the provision. Therefore, deduction under 80CCD subsection 2 would also be restricted to 1,44,000. Even though the entire employee salary of 1,80,000 is included in salary. Beautiful point they are saying. Sir, when you are computing the salary income, like this only you would have calculated. Are you all really with me? Since the employer has also contributed 15% of the basic salary, which comes to 1 lakh, we would have included 1,80,000 rupees in the gross total income. Am I right? That means that 1,80,000 cannot be claimed as deduction under 80CCD subsection 2 employer's contribution. Since the employer is other than central government and the employee is not traveling through the default tax regime, the employee is traveling through the maximum deduction allowable under 80CCD subsection 2 is only, which comes to only 1,44,000. That means I have included 1,80,000 in the gross salary and I am claiming deduction of only 1 lakh. Automatically 36,000 will be taxable in the hands of the employee as perquisite. Are you all really with me? Whether it has to become a taxable perquisite or not, that you are supposed to decide and I am not supposed to decide. Hello, sir. Government is saying that, sir, that you have to decide, not in my hands. Sir, however, this deduction of employer's contribution of 1,44,000 to pension scheme would be outside the overall limit of 1,50,000 under 80CCE. 80CC is limiting only employee's contribution. Own contribution, not others' contribution. 80C plus 80CCC plus 80CCD subsection 1 is equal to 80CCE is equal to 1,50,000. In that overall limit, 80CCD subsection 2 is not at all coming. Pakka. This deduction would be over and above the other deductions which are subject to the limit of 1 lakh. The second part of the question, sir, where Mr. Arjun pays tax under the default tax regime, Mr. Arjun would not be eligible for deduction under 80CCD subsection 1. 80CCD subsection 1B in respect of his contribution to pension scheme under default tax regime under 115 BAC. Sir, under default tax regime is against chapter 6 reduction. Are you all really with me? Whereas 80 CCD subsection 1 is whose contribution? Employee's contribution. There is no such concept at all under the default tax regime. 80 CCD subsection 1B is also employee's contribution. There is no such concept under the default tax regime. However, he would be allowed a deduction of 1,44,000 under 80 CCD subsection 2 in respect of employer's contribution to pension scheme. So this 1,44,000 we have to read it as 14% of salary. Are you all ready with me? This is just 10% of salary. It has been amended, my dear lovable students. Now, what is the salary we have already calculated? 14,40,000. So 14,40,000 into 14% comes to 2,01,000. Up to 2,01,600 you can claim it as deduction, but the employer contributed only 1,80,000. That means, sir, if the employee is traveling through the default tax regime, up to 14% you can claim. That means entire 1,80,000 can be claimed it as a chapter 6A deduction. Are you all really with me? Now you tell me, question number 6. Are you having a good clarity now regarding 80C, 80CCC, 80 CCD subsection 1, 80 CCD subsection 1B, 80 CCD subsection 2, 80 CCE. This is what we have discussed till now. So the gross total income of Mr. Neeraj for assessment year 25-26 is 8 lakh. That means they have added all the 5 heads of income and they are saying that the gross total income is 8 lakh. He has made the following investments or payment during financial year 24-25. Contribution to PPF, how much? 1,10,000. Sir, you are entitled to claim deduction under payment of tuition fee to Sunrise School, Mumbai for education of his son studying in class 10th. Tuition fees up to 2 children you can claim. This also can be claimed as deduction under repayment of housing loan taken from Canara Bank, interest IFHP and principal chapter 6 deduction. You can claim deduction under 80. Contribution to approved pension fund of LIC. LIC sir 80 CCC. Am I right? Individually you can claim 80C 1,50,000. 80 CCC individually you can claim 1,50,000. But put together you can claim only 1,50,000. Compute the eligible deduction under chapter 6A for the assessment year 25-26 if Neeraj exercise the option of shifting out of the default tax regime provided under 115 BSc subsection 1A. Easy. Contribution to PPF, these are 80C 1,10,000, 45,000, 25,000. Total comes to 1 lakh, but it should be restricted to 1 lakh. And 80 CCC, my dear lovable students, 1,05,000. But put together, sir, total 2,55,000. But it should be restricted to, what is the mathematical formula? 80C plus 80 CCC plus 80 CCD subsection 1 should be equal to 80 CCC is equal to 1,50,000. Are you all really with me? My dear lovable students, we are having 2 new additions called as 80CCH, 80CCH, 80CC, 80CCH subsection 1 and 80CCH subsection 2. This is what 80CCH subsection 1 and 80CCH subsection 2. If we discuss that also, our 80C series comes to an end. Sir, nothing man. Sir, now people are so much interested in the Instagram, Facebook, sir, all the social media and everywhere if you see people are saying that I am mentally affected, I am having some mental problems. The reason for the mental problem is very simple, man. People are not doing anything on time. Because of that, stress is getting creating and people are saying like that. And many people does not at all becoming patriotic also. They are simply coming, they are simply living, they are simply dying. Earlier and all, working for the India, working in India, working for the betterment of India, everything was a proud and pride thing. Now, people started asking that, where is India, what is India? Like that. So, central government is not getting the human resources for the army. Are you all really with me? For the navy. Sir, they can't bring robots like China and all. We are so much rich in the human resources. Our population is so much high. People are saying that we are having good strength at our human resources. So now the youth is not at all attracted to the army, navy, etc. So government come up with a scheme. This is the scheme they come up. Sir, Agnipath scheme is a central government scheme launched in 2022 for enrollment of Indian youth in the Indian army. My dear lovable students, sir, after your 10th standard, after your 12th standard, you be very strong physically, you come and join the army. Hello, sir. In order to attract the Indian youth, Indian government in 2022 came up with this scheme. What are the benefits of scheme? So anyway, sir, you are going to serve the Indian country. Am I right, sir? Sir, what government said that we will be creating a separate fund for you called as Agniveer Corpus Fund. What man? Agnivir Corpus Fund means a fund in which consolidated contribution of all the Agnivirs and matching contribution of the central government along with interest on both these contributions are held. What they are saying is, sir, for general public, they are having notified pension schemes. Am I right, sir? But you people are army people, very strong people. You are going to serve for the country. Sir, you are going to be a army person. Right, sir? Don't say army person. Give respect to them. You have to call them Agnivir. From here onwards, you are going to call them as Agnivir. And we are going to, sir, bring a bucket for the Agnivirs. In that bucket, sir, central government will contribute for them. And from your salary, for example, if you are getting 100 rupees a salary, my dear lovable students, look at here, man. If you are getting 100 rupees a salary, 30 rupees of your salary will be contributed to that bucket. Are you all agree with me? The same 30% will be contributed by the employer, central government also. For the other people, we are contributing only 14%. How much percent? Because we are loving them. We are not like other employees. February 14, I love you, sir. Sir, we are contributing 14%. We are not like other employees. Are you all really with me? Other employees, if the employee is traveling through the default tax regime, only they can contribute 14%. But irrespective of the employee's travel, if I am a central government employer, I can contribute 14%. Hello, sir. But if you are Agnivir, not 14%, we will contribute 30%. Oppa. How much percent? Features of the Agnipath scheme. Each Agnivir is to contribute 30% of his monthly customized Agnivir package to the individual's Agnivir's corpus fund. For example, if you are getting 100 rupees salary, contribute 30 rupees, balance 70 rupees only take home. Are you all really with me? Further, the government will also contribute a matching contribution to the Agnivir corpus fund. That means even government will also contribute. Government will also pay to the subscriber interest as approved from time to time on the contribution standing to his credit. For that 30%, government is ready to give interest also. That means if you are, sir, going to be a railway employee, to the youth people, to the +1, +2 students who are studying, I am going to ask a question. What you want to be? You want to be a chartered accountant? Then you die. Sir, private work you have to do. You have to file the return of income like that. Sir, I want to be a central government employee. Okay, fine. What central government employee? Are you want to be a railway employee? Yes, sir. Then we'll contribute only 14%. Sir, I want to serve the India. That means I want to be a army person. Come on, man. We are ready to contribute for you. Quantum of deduction, man. Section 80 CCH subsection 1 provides a deduction for the amount paid or deposited by assessee being an individual enrolled in Agnipath scheme. That means if you are a central government employee, that means an army person, you will be having basic salary. Yeah? All these elements of salary will be there. Are you understanding what I am writing? From this basic salary, you will be contributing 30%, not 30% of basic salary. They said that 30% you have to contribute. It will be 30% of the salary. Some calculation will be there. On that 30% you are supposed to contribute. Hello, sir. That can be claimed as deduction under 80 CCH subsection 1. That means whose contribution? Employee's contribution. Can we claim it as a deduction under 80 CCH subsection 1? Sir, deduction under 80 CCH would be available to an individual only if he has exercised the optional tax regime. That means under the default tax regime, 80 CCH subsection 1 will not be applicable. Are you all really with me? But equally, who will also contribute? Employer will also contribute. That will be treated as a perquisite in the hands of the employee. So, employer's contribution to notified pension scheme, illa Agnipath scheme. That is not NPS. This is APS. Are you all really with me? Which will be how much percent? And this 30% can be claimed as deduction under 80 CCH subsection 2. Right, sir? Sir, under 80 CCH subsection 2, whole amount of contribution made by central government of the said account of the assessee in the Agnivir corpus fund is allowed as deduction in computation of total income of the assessee. That means whether you are traveling through the optional tax regime or default tax regime, look at here, man. Sir, deduction under 80 CCH would be available to an individual irrespective of the regime under which he pays. So from here onwards, if you say under the default tax regime, chapter 6 is not applicable, it is wrong. The exception to that is 80 CCH subsection 2. Are you all really with me? That means employee's contribution will be allowed as Agnivir's contribution will be allowed as a deduction under 80 CCH subsection 1. Employer's contribution can be claimed as a deduction under 80 CCH subsection 2. 80 CCH subsection 1 will be allowed as a deduction only if the employee is traveling through the, whereas 80 CCH subsection 2 will be allowed as deduction, sir, irrespective of the tax regime. This one table will be, sir, helpful for you before the day of examination. 80 CCC, my dear lovable students, if you are investing in the prescribed investments, you are entitled to claim 1,50,000. 80 CCC, sir, certain pension fund, how much? Individual, 1,50,000. 80 CCD subsection 1, contribution to notified pension scheme of government, 10% of salary or 20% of gross total income, as the case may be. That's what maximum I can claim. Am I right? Either 10% or 20% as the. Whereas 80 CCE is saying that 80C plus 80 CCC plus 80 CCD subsection 1 is equal to 80 CCE is equal to 1,50,000. Pakka. That's it. I've closed the ending section. Then only I'm starting the 80 CCD subsection 1B, because 80 CCD subsection 1B are over and above 80 CCE. Right? Which is contribution to notified pension scheme notified by central government outside the limit of 1,50,000. How much you can claim? Sir, 80 CCD subsection 2 is whose contribution? Employer's contribution. Contribution by employer to notified pension scheme of government outside the limit of 1,50,000. Sir, 14% of basic salary under 115 BAC. My dear lovable students, if the employee is traveling through the default tax regime, then employer can contribute up to 14% and 10% of salary under the optional tax regime. And if the employer is a government employee, then 14%. Are you all really with me? That's what contribution by central government to notified pension scheme. Then, sir, you can claim 14% of salary as deduction under 80 CCD subsection 2. Am I right? 80 CCH contribution by employee to Agnipath scheme. 30% of his monthly customized Agniveer package. That's what. It's not 30% of the basic salary or 30% of the salary. There will be customized package will be there. On the 30% you can claim it as deduction. 80 CCH subsection 2 contribution by central government to Agnipath scheme. 30% of his monthly customized Agniveer package. Out of all the sections, my dear lovable students, all these sections can be claimed as deduction only under the optional tax regime. Whereas 80 CCH subsection 2 can be claimed as deduction under the default tax regime or optional tax regime, as the case may be. With this, we can say that we are done with the 80C series, my dear lovable students. If you see the chapter 6 deduction, so the first family is 80C family in one slot of our workout. My dear lovable students, will be completing one slot. Today is 80C series time. Are you all really with me? What are the sections? 80C, prescribed investments. 80CCC, notified pension scheme. 80CCD, subsection 1, employees' contribution to the notified pension scheme. 80CCD, subsection 1B, employees' contribution to the notified pension scheme up to 50,000. Over and above 10% of salary up to 50,000. 80CCD, subsection 2, employers' contribution to notified pension scheme. 80CCE, limiting section. 80CCE, limiting section. 80CCH, contribution to Agnipath scheme. Agnipath scheme. Again, repeat once again. What is 80C? Prescribed investments. What is 80CCC? Notified pension scheme under section notified pension scheme. 80CCD subsection 1, employees' contribution to notified pension scheme. 80CCD subsection 1B, employees' contribution to notified pension scheme over and about 10% of salary up to 50,000. 80CCD subsection 2, employers' contribution to notified pension scheme. 80CCE, limiting section, and 80CCH, Agnipath scheme. In that 80CCH subsection 1 is there, 2 is there. 1 is employees' contribution, 2 is. Sir, I'm moving into the workout continuation of the clubbing of income, my dear lovable students. In clubbing of income, in the last class, we have solved up to question number 11. Can I start with question number 12? We are pending with question number 12. We are pending with question number 13, second question. Then question number 14, third question. Then question number 15, fourth question. Only 4 questions are pending for us. Are you all really with me? If possible, all the 4 questions will be finished off, or 1 or 2 minimum will be completing. Mr. Vikas holds shares carrying 33% voting power in Kavya Limited. Okay, right. That means Vikas is having substantial interest in Kavya. Mrs. Pingy is working as an accountant in Kaya Limited. Kavya illa pa, Kaya pa, sorry pa. Getting income from salary computed of rupees 4,60,000 without any qualification in accountancy. First of all, Vikas hold 33% voting power in Kaya va. Mrs. Pingy, who's this donkey? Don't know. Have they mentioned that Pingy is the wife of Vikas? No, sir. Okay, fine. We'll read it. I don't know what is their relationship. Mr. Vikas also receives 35,000 as interest on security. That will be taxable in his hands. Mrs. Pingy owns a house property which she has let out. My dear lovable students, that income will be taxable in her hands only. Rent received from tenant is 6,000. Compute the gross total income of Mr. Vikas and Mrs. Pingy for the assessment year 25-26. Sir, since Mrs. Pingy is not professionally qualified for the job, clubbing provision shall be applicable. So question is having an inner assumption that since Mrs. has been given in the question, this is a Mrs. of this Mr. Are you all really with me? Hence, sir, from a concern in which an individual is having substantial interest, from the same concern, his or her spouse is getting remuneration. That remuneration will be clubbed in my hands. Are you all really with me? That means income from salary of Mrs. Pingy already computed has been given. Don't go and reduce standard deduction and get a hit. 4,60,000. Am I right? IFOS interest on securities 35,000. So the gross total income will be 4,95,000. Are you all really with me? Now Mrs. Pingy, sir, income from salary will not be taxed in the hands of Pingy. It will be clubbed in the hands of Mr. Vikas. And income from house property, sir, gross annual value 6,000 rupees per month she is getting. 6,000 to 12, 72,000. Let's LT bar MT paid by the owner. Nothing has been given in the question. So NAV is, let's deduction under section 24. 30% of net annual value, which is 21,000. IOBC, nothing has been given. Gross total income is 50,400. This gross total income will be taxable in the hands of Mrs. Pingy. Understood? Come on. Mr. Sarath Kumar is a member of HUF. So there is a Hindu undivided family. In that, Sarath Kumar is a member. It consists of himself, his wife, obviously, Jyoti, and his major son, Arjun, and his minor daughter, Aditi. Look at man, Sarath Kumar is having family, sir. His wife, Radhika, sir, Jyoti is there. And his major son, Arjun, and minor daughter, Aditi. Mr. Sarath Kumar transferred his house property acquired through his personal income to the HUF without any consideration. This is This is conversion of private property into HUF property. Any income accrued or arisen from that converted property will be clubbed in the hands of the Sarath Kumar. On 1/10/2024, HUF is partitioned and such property being divided equally. Net annual value of the property of the previous year, 24-25, is how much lakh? 1 lakh. Determine the tax implications is the question. My dear lovable students, here he is having a what? House property. He's having a? If an individual is transferring house property to the HUF, whether section 27 is applicable? What is section 27? Deemed owner. If section 27 applicable, then clubbing provisions will not be applicable because 27 concept is inclusive of clubbing. So still I am the owner, then why I have to, then how you will say that other income owner, hey, owner are you really with me? So since Mr. Sarath Kumar, who is a member of HUF, transfers the house property acquired by him out of his personal income to the HUF without any income from such property would continue to be included in his total income up to the date of partition. So till the asset is getting partition, sir, clubbing provisions will be. Accordingly, income from such property for 6 months up to the date of partition, that is 30th September, is 70,000, which is nothing but, sir, net annual value is how much lakh? 1 lakh. On that net annual value, 30% deduction you have to claim. Balance will be 70,000. Sir, annual value 1 lakh less standard deduction would be included in the total income of Mr. Sarath Kumar. That means out of 70,000, first 6 months, 35,000 income will be treated as Sarath Kumar income. Since HUF was partitioned on what date? 1/10, income derived from such converted property as is received by Mr. Sarath's spouse, whom Jyoti on attrition will be deemed to arise to Mr. what? Sarath from house property transferred indirectly by him to her because he transferred to the HUF and HUF transferred to spouse. Correct? And consequently, such income would also be included in the total income of Mr. Sarath Kumar. Accordingly, Sarath Kumar's share, how much percent? 25%. And Jyoti's share would be included in the total income of Mr. Sarath Kumar. My dear lovable students, sir, Sarath Kumar's share is total 35,000. Sir, after partition, how many people? 4 people are there in the HUF. Who are the 4 people? Sarath Kumar 1, Jyoti 2, Arjun 3, Aditi 4. So for that house property, 4 people will be owner. Only Sarath Kumar will be owner for 25%. Am I right? That means, sir, 35,000 into 25% comes to 8,750. Am I right with the calculation? Even my dear lovable students, Sarath Kumar wife's income will also be taxed in the hands of the Sarath Kumar. Jyoti's share will also be clubbed. Are you all really with me? Now, sir, income from house property includable in the income of Sarath Kumar is for the first 6 months 35,000 rupees. Next 6 months, his share 8,750. Yeah. Next 6 months, sir, wife share 8,750. So total 52,500. Are you all really with me? Still two people are there. Who and who? Aditi and Arjun. Arjun is a major, whereas Aditi is a 25% share of Sarath minor daughter. Who? Aditi, which is 8,750 being 25% of 35,000 would be included in the total income of Sarath or what? Jodi. Whoever total income before including Aditi income is higher, such parents shall be eligible to exemption of 1,500 under section 1032. Right? Don't add that Aditi is also to, sir, his income, because question never said that he is having the higher income, because minor income should be clubbed in the hands of the parent who are having 25% share of Sarath major son Arjun 8,750 would be included in the Arjun's total income. Sir, that will not be clubbed because only minor's income will be clubbed. Distribution of house property on partition of HUF is not a transfer for levy of capital gain tax. Sir, they have attached even capital gain also as per 47 clause 1. Distribution of capital asset by an HUF to its members at the time of total or partial partition will not be regarded as transfer. That means in the hands of the HUF, capital gain tax will not be applicable. These are comprehensive to the comprehensive. Are you all really with me? I'm just interested to go back, my dear lovable students, and I want section 27 reference once again. 27. What is 27? Deemed owner, right? Where? Yeah. Already that deemed owner concept we have attached in the clubbing, I think. Yes. Before here. Yes. Look at the deemed owner concept, man. Sir, these are the deemed owner concept. Transfer to a spouse. Sir, if an individual transferring property, house property to his or her spouse without adequate consideration. Transfer to a minor child. Sir, if I am an individual, if I am transferring house property to a minor child, then I will be the what owner? Deemed owner. So spouse will be deemed owner. Minor child will be deemed owner. Are you really with me? Holder of impartible estate. Impartible estate. Member of cooperative society or company, person in possession of the what? Property, person with right in property not less than 12 years. My dear lovable students, in this, if an individual is transferring property to the HUF is not covered. Not covered. That clarity you should have. Only if an individual is transferring property to the spouse, and if an individual is transferring property to the minor child, then only section 27 will be applicable, not to the HUF. That's why for HUF, 64 subsection 2 clubbing attracted. Sir, if it is deemed owner, clubbing provision will not be applicable. But this is not a what owner? Are you understanding the difference? I'm continuing with the next question, man. Question number 14. Mr. B is the kurta of HUF, whose members derived income as follows. Income from B's profession. Sir, income from B's profession will be taxed in the hands of Mr. B itself. Are you all really with me? Mrs. B's salary is as fashion designer. She know how to design. So she is not getting remuneration from a concern in which Mr. B is having substantial interest. Then clubbing provisions, no need. 76,000. Who is, sir, having more income? Mrs. B. Minor son D. Interest on FD with a bank, which were gifted to him by his uncle. My dear lovable students, this FD income will be clubbed. 10,000. It will be clubbed in the hands of Mrs. B after claiming an exemption of 1,500. Minor daughter P's earnings from sports. Sports needs skill and talent. That means this income will not be clubbed. D's winning from lottery. Casual income 1,95,000. This will be clubbed in the hands of Mrs. B. And already on that lottery income under section 194B, TDS at the rate of 30% would have deducted. That TDS can be claimed by Mrs. B because that income she is including in her hands only. Explain the tax implication in the hands of Mr. and Mrs. B is the question. Come on. Clubbing of income and other tax implication. As per the provisions of 64 subsection 1A, in case marriage of the parents subsist, the income of minor child shall be clubbed in the hands of parents whose total income, excluding the income of minor child to be clubbed, is greater. In this problem, it has been assumed that marriage of Mr. and Mrs. B subsists because nothing related to that has been given in the question. Further, in case the income arising to minor child on account of any manual work done by child or as a result of any activity involving application of skill, talent, specialized knowledge or experience of the child, then same shall not be clubbed in the hands of parent. Tax implication, man. Sir, income of 45,000 from Mr. B's profession shall be taxable in the hands of Mr. B under the head PGBP. Are you all really with me? Salary of 26,000, which is nothing but 76,000 less standard deduction of 50, shall be taxable as salary in the hands of. Now look, this is what? Salary. If you claim 50, what is become? 26,000. Now Mrs. B is having less income. Are you understanding what mistake you will do? Now all the clubbing provisions will be applicable in the hands of. Super. Sir, income from FD of 10,000 arising to minor son D shall be clubbed in the hands of father, because Mr. B as IFOS, since Mr. B's income is greater than income of Mrs. B. Have you understood what mistake you will do? Before including the income of minor child, as per 1032, income of minor child, which is includable in the income of parent, shall be exempt to an extent of 1,500. If they are traveling through the income of 95,000 arising from minor daughter P from sports shall not be included. Why? Because that income has been accrued arisen from skill or talent. Income of 1,95,000 arising to minor son D from lottery shall be included in the hands of Mr. B as income from. Since Mr. B's income is greater, and my dear lovable students, Mr. B can reduce the tax deducted at source from such lottery income while computing his net tax liability. Am I right? The last question from the entire discussion of the clubbing, with that we can say that clubbing will comes to an. Mr. Jain and his wife Mrs. Jain are partners in a partnership firm holding 25% each. That means 25 means 50, remaining 50 some other person are holding. During financial year 24-25, firm paid 2,50,000 to each of them as a remuneration. Sir, salary and all will be taxable in the hands of the partner. Apart from this, they provide you the following information in respect of 24-25. Salary received by Mr. Jain from his employer is how much? This will be treated as salary of Mr. Jain. That means they are having income from salary and also having partnership firm. Interest on FD earned by Mrs. Jain, how much lakh? FD was opened by using her Sridhanam. Hello, sir. That means, my dear lovable students, this income will be taxable in the hands of Mrs. Jain. Income of their 3 minor children, 3, Nita, Meeta, Pota, Sita, rupees 15, 10 and 2,000 respectively. Sir, now I have to calculate who is having higher income, and I have to club it in the hands of the person who are having higher income after claiming deduction of 1,500 per child. There is no limit. You can have as much as you can. It is, sir, up to you. You are required to compute the gross total income of Mr. and Mrs. Jain as per the provisions of Income Tax Act, assuming they have shifted out of the default tax regime. That means they are going to travel through the first one man, Mr. Jain and Mrs. Jain. Mr. Jain, 12,50,000, standard deduction 50, because they are going to travel through the optional tax regime. 12 lakh will be taxable salary. Yeah. Interest on FD earned by Mrs. Jain, 14 lakh rupees will be IFOS. Total income before including remuneration is 12 lakh and 14 lakh. Who is having higher income? Mrs. Jain is having higher income. Right, sir? A remuneration from firm, assume that same is fully deductible in the hands of the firm. My dear lovable students, there is a partnership firm. From that partnership firm, Mr. Jain and Mrs. Jain is getting remuneration. Remuneration means salary. Yes, sir. Sir, both are having 25% holding, means both are having substantial interest. Right, sir? Have the question said that the other partner does not possess any professional technical qualification? No, sir. First 2,50,000 they have taxed it, sir, in the hands of Mrs. Jain. A remuneration of 2,50,000 received by Mr. Jain has to be included in the total income of, since both of them have substantial interest in the concern. Hello, sir. And their total income of 14 lakh exceeds the total income of our spouse 12 lakh. It is assumed that such remuneration is fully deductible in the hands of the. Why this 2,50,000 has been included in the hands of Mrs. Jain is both Mrs. Jain and Mr. Jain are having substantial interest. And Mr. Jain is getting salary income from an employer. That means he is working for some other person. Hello, sir. That means technically question is having an indirect meaning that Mrs. Jain is only a partner, but they are having two names, Mr. Jain and Mrs. Jain. So he is also getting salary. He is not a working partner. Who is only working partner? Mrs. Jain. Sir, if Mr. Jain is working for some other employer, then how he can work for the partnership firm? If I am working for ANM classes, then how he can work for some other company? Are you all really with me? That's why even this 2,50,000 rupees also will be included in the remuneration of the. So I have done the clubbing of the parents first. So total income before minor income is 12 lakh and 90 lakh. Still who is leading? Mrs. Jane is leading. So, income of 3 minor child to be included in Mrs. Jane, her total income before including that of her husband. So, Nita, Mita, Sita, sir, 15, 10 and 2000, total 27,000. All 1500. So, 1500 into 3, 4500. Can we claim it as deduction under 10 subsection 32? Balance 22,500 will be clubbed in her hands. So, the gross total income is 12 lakh. And gross total income is 19,22,500. With this, our block of clubbing, set of carry forward and chapter 6 deduction, we have done the first discussion of clubbing in full, my dear lovable students. I hope that you are feeling so much comfortable now. Your duty is very simple, man. Revise, revise, revise. Daily 7 questions you are supposed to revise from this slot. In the coming slot, we'll be talking about 80D series. And in the extra time, we'll be doing the set off and carry forward questions. Pakka?